Welcome, Bitcoin fam, to No One Daily Bitcoin Pod. In today's show, be sharing the latest Bitcoin technical analysis, as well as the SEC met with El Salvador this week to discuss creating a sandbox for Bitcoin and crypto innovation. The new era begins. We'll also be discussing Bitcoin supply on the exchanges is falling due to the public company purchases. Can you say incoming supply shock? We'll also be discussing Asian firms ramp up their Bitcoin buys, including Meta Planet and BlackRock. Their Bitcoin fund wins the best new ETF on $643 million inflow day. Also, breaking news, we will be discussing sovereign wealth funds piling into Bitcoin as the retail exit, according to the Coinbase executive, as well as Max Keiser makes a whopping 2.2 million Bitcoin forecast amid 21 Capital versus Strategy showdown. I'll be breaking this down for you, and as a bonus, we'll be discussing how to create an income with your Bitcoin, British HODL style. We'll also be taking a look at the overall crypto market. All this, plus so much more, in today's show. If you're new to the channel, very important, smash the likes, subscribe, ring the bell, turn on all notifications to receive daily premium crypto news alerts every day, just like this. Today is pod number 1972. I'm your host, JV, and this is your co-host, Nippinator. Glad to be here today, April 24th, 2025. Let's kick it off with our market watch, as we do each and every day. We finally pull back some after several days of green bullishness in the markets. The silver lining, we're still maintaining above 93,400 at the time of the live stream, only down 0.3% on the day. Ether in the red, XRP and BNB all correcting and in the red. And checking out coinmarketcap.com. The current crypto market cap sits at a staggering $2.93 trillion. Bitcoin market cap just shy of 1.9 trillion. We got roughly, I would say, 89 billion worth of volume over the past 24 hours. So volume's down 20 or 34% on the day. Bitcoin dominance has been climbing, currently 63.4%. Ether dominance, 7.3%. And checking out top 100 crypto gainers past 24 hours, we got Polygon Matic up 12%. Artificial Superintelligence Alliance up 12%, and Stacks up 10%. Which alts, if any, are you bullish on for the bull? Let me know. And checking out the crypto bubbles, we'll get a visual perspective on the day. As you can see, most of the market in the green overall, even though a lot of the top coins are correcting and in the red. Zooming out on the weekly, I'd say virtually everything in the green, like 98% of the market. Not too shabby there. Trump coin leading the pack. As you know, Trump made an announcement that the top holders of the Trump meme coin would win a dinner, and it soared literally 60% in a day, which explains the price jump. But anyways, the monthly you're looking at now, it's pretty divided. I'd say 60-40, red over green. And checking out the crypto greed index, today we're 63 greed. Yesterday, the highest we've been in a hot minute at 72. Last week at 30, and last month at 46 in fear. Checking out the infamous time chain calendar. We're currently on block height 893,812. We have 156,188 blocks to the next halving, and you can currently exchange one fiat monopoly dollar for 1,071 sats. So pick up the sats, put down the gats, and pick up some Bitcoin cats from my man Sergio over at bitcoincaps.net. And if you don't know now, you know. Welcome everyone to the live stream. What to do. Anyways, without further ado, we'll dive into today's TA, aka astrology for the broskies, and I'll pull up some of the live charts. Bitcoin short squeeze or 87 dip next. You let me know your thoughts, and I'll break down some of this TA as per some of the analysts here on the market. Let's start right here at the 1 hour chart. Bitcoin consolidated below key resistance today as the price forecast brought sub 90,000 levels back in play. The market is now up over 1% on the day on no news at all, according to the Kabisi letter. As we have seen multiple times this year, it almost feels like someone is front-running something right now. We expect to see some sort of bullish announcement soon. Bitcoin continued to brush off the news events, leaving volatility to the equities, while gold attempted to stabilize after slipping from record highs. We did tap roughly $3,500 per ounce of gold. And quoting Mikhail Vende Pop, fairly normal to have a slight correction here on Bitcoin, as it's just had a massive breakout. Buyers likely going to step in, and then we'll be continuing our path towards new all-time highs. Let me know if you agree or disagree with the analyst. Immortal says a dip to 88,000 would be lovely. If the market gives it, I will probably play one of these two setups, or maybe both. Also, Rec Capital had a similar conception for the potential support retest, quoting them here. Depends upon how the Bitcoin weekly closes relative to 93.5. I shared alongside the chart. So the main target thus remains at 93 for the yearly open. And Chad says Bitcoin liquidation heat map shows that liquidity of leverage positions is building up on both sides. Leverage longs mainly around 91.4 and leverage shorts at around 93.5 to 94.5. So you let me know which direction will likely head next. And like I said, I'll pull up the live chart here. Also, breaking news, the SEC did meet with El Salvador this week. And of course, last week, we had Bukele meeting with Trump. President B meets President T, which is always bullish. And now they're going to be creating a sandbox for Bitcoin and crypto innovation. The new era begins. Chigga, 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 Slim JV. Stack the biddy. But there you have it. And now let's pull up some of the live charts really quick. We'll take a quick look at some of the different time preferences, starting with the hourly, and then we'll work our way back from there. So let me see here. And this is live via TradingView, via Coinbase. The 1 hour chart, as you can see on your screen, we had a lot of bullish momentum in the past week. In fact, even today, we're climbing right back, but we did dip some, obviously, after 3 consecutive days of bullishness. Zooming out from the hourly, let's check out the 4 hour. 4 hour chart, you can see this morning we had 3 green consecutives, and we finally got a red corrective, which is where we're at. And yesterday, a lot of green 4 hour candles. And zooming out from here, there's no particular target. We'll go to the daily. And the daily chart does have a bull target. There is a rising wedge formation followed by a falling wedge. The bull scenario is just shy of 112,000, which take us back to price discovery. Bear scenario, just shy of 69 Gs. And zooming out a little further from there, we'll go to the weekly. And the weekly chart, you can see 3 consecutive green candles, which is nice. So this week has been very bullish, already basically outpacing the 2 previous weeks put together virtually. And Sunday we'll get the next weekly close. The silver lining here is we do have the cup and handle $124,000 target in play. And taking one more look here at the 1 month, a broader perspective, you can see the month of April thus far so good. Big green candle. Previous 2 months were bearish, unfortunately. And, November was the biggest green candle we have ever seen in Bitcoin's history. So there you have it. Let me know which side you think Bitcoin is likely to play next, up or down, up, down, left, right, BA, BA, select, start. Infinite Men. Y'all remember the Contra cheat code for my NES? OGs, let me know. Bitcoin supply in the exchanges is falling due to the public company purchases, which means incoming supply shock, more bullishness for the preload biddy. Bitcoin reserves on crypto exchanges have dropped to their lowest level in more than 6 years as publicly traded companies ramp up their accumulation of the digital asset following president election. According to Fidelity Digital Assets, quoting them here, we have seen Bitcoin supply on the exchanges dropping due to the public company purchases, something we anticipate accelerating in the near future. Fidelity said the supply of Bitcoin on the exchanges had fallen to roughly 2.6 million BTC, the lowest since November of 2018, and more than 425,000 BTC have moved off the exchanges since November, a trend often viewed as a signal of the long-term investment rather than short-term trading, meaning it's in the hands of the whales or the long-term hodlers. And over the same period, publicly traded companies acquired nearly 350,000 BTC, according to Fidelity. Fidelity is a subsidiary of, digital assets of Fidelity Investments, the almost $6 trillion asset management giant headquartered in Boston, Massachusetts. The Fidelity digital subsidiary was established in 2018, long before crypto was considered an institutional asset class. Fidelity is the issuer of the Fidelity Wise Bitcoin Fund, one of the first spot ETFs which were approved, one of the original 11. Fidelity noted significant corporate Bitcoin purchases. Most of the accumulation has been driven by Strategy, the business intelligence firm turned Bitcoin bank co-founded by Mr. Saylor. And since November, Strategy acquired 285,980 BTC, accounting for 81% of the approximately 350,000 Bitcoin purchased by publicly traded companies. Clearly, they're leading the pack by a long shot, and now they have some competition stirring up, which we'll dive into later. Jack Mallers being the CEO of a new company called 21. Ultimately, game theory, a great example of game theory playing out here from the corporate level. Yeah, I mean, with companies putting the Bitcoin on the balance sheet and doing all that fun stuff. And we also have MetaPlanet and these Japanese companies embracing the Bitcoin as the global hash wars continue. Next story of the day, we're going to try to knock out all the news as quick as possible. For today. Headline here reads, Asia firms ramp up their biddy buys as MetaPlanet and Hong Kong Asia continue to lead the charge. That's right. Tokyo-based MetaPlanet disclosed April 24th. It acquired an additional 145 biddy for almost 2 billion Japanese yen, 13.4 million USD, boosting its total holdings now to 5,000 Bitcoin. Their goal is to have 10,000 Bitcoin before the end of the year. So I think they're well on their path, and I believe their goal by the end of next year is to have 21,000 Bitcoin, and I believe they'll do it. It looks like they're on their trajectory. The firm has been aggressive in its Bitcoin treasury operations, using bond issuances and Bitcoin income strategies, such as selling cash-secured Bitcoin put options to finance acquisitions. Since initiating the Bitcoin strategy, MetaPlanet stock surged over 3,000%. Good Lord. The company aims to hold 21,000 of the biddy by the end of next year. Let me know if you think they'll hit their advantageous goal there. Hong Kong Asia Holdings also announced plans to raise 65 million Hong Kong dollars, which is 8.35 million USD, by issuing new shares and convertible notes to potentially buy more of the biddy. According to the April 23rd filing, the company entered into share subscription and convertible note subscription agreements after trading hours. The deal includes issuing 3.2 million new shares at a subscription price of $4 per share, alongside convertible notes valued at 52 million in aggregate principal amount. The newly issued shares would represent 0.82% of the Hong Kong Asia Holdings total shares in circulation. While the filing does not mention that Hong Kong Asia Holdings intends to use the funds to buy Bitcoin, many in the crypto community speculated that the capital raise is expected to fund further Bitcoin acquisitions. I mean, sounds like it. The speculation follows HK Asia's February decision to step into the Bitcoin markets, and then also, as you know, Saylor's been stockpiling Bitcoin like a madman, currently leading the pack. And as of 4/20, April 20th, Strategy now has 538,200 Bitcoin on the balance sheet. The figure includes the company's most recent acquisition of 6,556 Bitcoin for $555 million. And if you don't know, now you know. So yeah, BlackRock Bitcoin Fund wins best new ETF on 643 million inflow day. So the ETFs are so back when it comes to the incoming volume. Quoting them here, check it. I am pretty sure this is how I voted. Both of them did things no one else has seen before, according to Eric Balchunas, referencing Vanguard S&P 500 winning the ETF of the Year award. And over the past 5 years, VOO is up 89%, according to Google Finance. Now, IBIT, which is BlackRock's spot Bitcoin ETF, also one recipient of the crypto ETP, which is Exchange Traded Product of the Year. And they are the largest holder of Bitcoin as far as the other asset managers. And they hold more even than MicroStrategy. IBIT's 2 awards came the same day IBIT recorded 643 million of inflows, according to the Farside data. It was the highest inflow since January 21st, when it saw 662 million a day after Trump's inauguration. That was right after we hit the all-time high of 109.3, current price discovery. So yeah, it is what it is. Bitcoin commentator Vivek says this is massive, while Apollo Sats co-founder Thomas Farrer said it's a huge inflow. The IBIT fund, which launched January 24th on the 11th, alongside 10 other US-based spot Bitcoin ETFs, have net assets of roughly 54 billion. Pretty substantial, obviously. And you can see the IBIT Trust ETF currently trading at $53.20. Meanwhile, VanEck Bitcoin ETF received the award for the best new ETF ticker. IBIT's large inflow on April 23rd made most of 917 million seen across the 11 spot Bitcoin ETFs on the day, so almost a billion in volume. It was the second day in a row with over 900 million of inflows, amid most of the month posting outflows due to the macro uncertainty with all the trade war tensions and such. Glassnode pointed out that the 912 million ETF inflows the day prior equaled more than 500 times the 2025 daily average. And as you can see here, spot Bitcoin ETFs have purchased almost 25,000 of the biddy just over the past 3 days, worth 2.3 billion. So the institutional buying spree continues. Sovereign wealth funds piling into the Bitcoin as the retail exit. Can't make this ish up. That's right. Sovereign wealth funds and other institutions were accumulating Bitcoin during April of this year, while retail traders are exiting the markets via the ETFs and spot markets, according to John D. Agostino, the head of strategy of Coinbase. During the recent appearance at CNBC, the Coinbase exec linked Bitcoin to gold and said that many institutional buyers bought Bitcoin as a hedge against currency inflation and macroeconomic uncertainty. According to the Coinbase executive, Bitcoin is trading on its core characteristics, which again are similar to gold. You've got scarcity, immutability, and non-sovereign asset portability. So it's trading the way people who believe in Bitcoin would like to trade it. And when you do the work, there's a very short list of assets that mirror the characteristics of gold. Bitcoin's on the short list. So I guess they're trying to say Bitcoin drives the short bus is what it is. Governments and financial institutions are increasingly adopting Bitcoin to protect purchasing power and the value of their treasuries in the face of macroeconomic shocks and geopolitical tensions, which is a given, right? Makes sense. It's the ultimate hedge. Institutions adopting Bitcoin reserve strategies to combat inflation. We have sovereign countries like El Salvador and Bhutan adopting national Bitcoin reserves and actively purchasing Bitcoin for their reserves. Municipalities and state governments have also adopted pro-Bitcoin policies and proposed legislation to accumulate Bitcoin to protect the purchasing power of the treasuries from depreciating fiat currencies. Michael Saylor of Strategy, formerly known as MicroStrategy, popularized the corporate Bitcoin treasury concept. We call it the Saylor Put, adopted by growing a list of companies, including Marathon Digital, MetaPlanet, Semler Scientific, and even those Japanese firms like MetaPlanet, which we touched upon earlier. The executive also transformed the business software and intelligence company into a Bitcoin holding firm, akin to the Bitcoin hedge fund. And then on 4/20 for the broskies, Saylor announced that 13,000 institutions have direct exposure to Strategy, while an estimated 55 million beneficiaries have indirect financial exposure to the company. Bitcoin recently surpassed Google in market cap, making Bitcoin one of the top 5 assets in the world, ranking above Amazon and silver, and showcasing the supply cap digital asset meteoric growth since 2009. Now for our feature story of the day, the high priest of Bitcoin, Max Keiser, makes $2.2 million Bitcoin forecast amid 21 Capital versus Strategy showdown as the game theory continues in full effect. That's right. And another headline here strikes Jack Mallers, who's going to be the CEO of the company 21, seeking superior Bitcoin play to MicroStrategy. This is like Saylor's dream coming true. You have other companies trying to copy MicroStrategy, aka now Strategy B. Max also wrote here, speculative attack intensifies. Saylor started something in 2020. Don't cry over the low rates and inflation. Borrow cheap and buy the hardest money ever known. The tsunami of the copycats have arrived, referring to 21. And the more Bitcoin bought, the less appealing fiat money, particularly the US dollar, looks. As Satoshi said, it's a self-fulfilling prophecy. Well said, Max. He also wrote, the great thing about self-custody of Bitcoin is that if Wall Street's highly leveraged Bitcoin pyramid schemes blow up, you still own your Bitcoin and price goes exponentially higher due to the carnage of the fiat. We call this the Wall Street apocalypse. Bring it. We don't need no water. Let the motherfucker burn. The great thing is Saylor gets these employee founders at 21 Capital working for him for free. Hence Giga Chad. Hence we have Employee of the Month given to Jack Mallers for the month of April. So thank you, Jack. Well done, brother. So there you have it. But let's dive a little deeper. And then I said as a bonus, we're going to discuss some income strategies for your Bitcoin as per British HODL as a bonus. But let's dive deeper first into Max Keiser's $2.2 million Bitcoin price prediction off the back of this big news. Let's break her down. The Bitcoin price continues to trade with a bullish bias despite the minor correction. That's right. We did recapture 95 just the other day after bottoming out at roughly 74. Meanwhile, Strategy Executive Chair Mr. Saylor expressed even more optimism for Bitcoin. Saylor says Bitcoin can reach 50 million per coin if his company secures just 10% of the total supply, and I have no doubt in my mind that he'll achieve that. Could you imagine 50 million per Bitcoin? I sure can. Quoting Swan here, citing Saylor, if I am lucky enough to grind to 10% of the supply, the Bitcoin's going to 50 million per coin. That's right. I heard Saylor actually say that in the interview. This implies a market cap of above holy cow, I don't even know how to read the number, but whatever. Obviously, $1 trillion plus. For perspective, it means valuation 10 times higher than the 2023 global GDP of 100 trillion. So I think it means 1,000 plus trillion. So I don't know how to say the number, but nonetheless. Notably, MicroStrategy, the world's largest corporate holder of Bitcoin. Again, they've been accumulating like madmen. Saylor continue to steward the company's aggressive Bitcoin purchases. And then Max Keiser is now quoting 2.2 million in play as a result between the showdown of Mahler's newly formed 21 Capital and Saylor of Strategy. And according to Kaiser, institutional FOMO, like a mofo, and Bitcoin is reaching a fever pitch. As he shared here, the inevitable and undeniable path for Bitcoin is to take out gold in the #1 spot on the global asset leaderboard. And right now, gold is like a 22 trillion market cap, with it recently just hitting a new all-time high, just shy, I think, of 3,500 just the other day. And he says then to keep going, eventually Bitcoin will represent more than 10% of all the capital on the earth. So he believes the total addressable market of all the money, 10% will easily flow into Bitcoin. And referencing the rise of 21 Capital, Kaiser explains that Mahler and Saylor's firms are throwing the US dollar under the bus. While he acknowledges Saylor's prediction is a bit over the bar, he noted that Bitcoin at 2.2 million could be a reality. So yeah, 50 million prediction from the Giga Chad himself, and the high priest is saying, hey, 2.2 million in play. Let me know if you agree or disagree. Notably, 21 Capital is a Bitcoin investment firm created after Cantor Fitzgerald, SoftBank, and Tether. So they have the banking giants, or just giants in general, backing them, which is a big deal. Also, Bitfinex pulled $3 billion in capital there collectively. Jack Mallers comes as co-founder and CEO. We all love Jack, you know, the founder of Strike. He brings experience furthering Bitcoin's adoption at the institutional, corporate, and government levels. Mallers founded the Lightning payment app, Strike. Then we have Stephen Lubka, head of Swan Private Wealth, says 21 Capital could challenge Saylor's MicroStrategy. Mallers is introducing Bitcoin native metrics like the Bitcoin per share, BPS, effectively challenging Strategy's model, where investors have indirect exposure to Bitcoin through the MSTR stock. Notwithstanding, Lubka said that the inadvertent competition could still pan out as a net positive for Bitcoin or for Strategy or for both. Exactly, we call that game theory. Quoting him here, ironically, someone throwing the gauntlet at MicroStrategy, we want to become the most successful company in Bitcoin, only makes MicroStrategy more valuable. I'm sure Saylor's smiling right now. Others like TD Cohen analysts see 21 Capital as the most meaningful validation to date of MicroStrategy's Bitcoin-focused treasury strategy. Quoting him here, this is a turning point in institutional sentiment around the MicroStrategy share. It leaves us incrementally more bullish. Vanek head of digital asset Matthew Siegel did share. So there you have it. At these institutional giants continue to look to rival each other by stacking Bitcoin, launching native Bitcoin investment vehicles. Market liquidity is drying up. The Mahler-Saylor rivalry could accelerate a supply squeeze, pushing the price of Bitcoin into the parabolic territory. So you let me know your thoughts with that. And as a bonus, I want to touch upon this recent post from British Hodl. Shout out British Hodl. He recently tweeted, when I moved to Dubai, I needed a car. The car would have cost $100,000, $2,800 to rent inclusive of everything. So ultimately you would pay $2,800 for a lease a month. So I decided to put $100,000 instead into MSTY and use the growth engine of Bitcoin to pay for the car. And so far I have an average monthly income between $6,000 and $7,700 per month, and the car costs $2,800. And I still have that $100,000 in a growth vehicle. The average Bitcoiner, should they have decided to get this car, would have liquidated $100,000 to do that, and now could have a car instead of the Bitcoin-powered growth. Which way is smarter? And I want you to answer this question, and I want to actually read this person's response, and then British Hodl's response, and then open up a conversation regarding this. And the reason I'm even entertaining this is I'm contemplating buying a brand new Range Rover for roughly $150,000. So I'm thinking out loud, should I use 1.5 Bitcoin and just own it free and clear? Or should I do a play, instead of putting the 1.5 Bitcoin into purchasing the vehicle, put it into like MicroStrategy or MSTY, collect the yield and turn that Bitcoin into an income to pay for the car loan and then some. So there's different strategies. So that's why I bring this up. This person, Shaquilo Oatmeal, what a username. He put TLDR MSTY equals a short-term yield trap. Bitcoin equals a long-term asymmetric upside. Don't trade the engine for the exhaust pipe. The MSTY approach sounds clever at first, but the math doesn't back it. Long-term, you put 100,000 into MSTY and make 6 to 7,700 a month. Sounds good until you ask, what's the real opportunity cost? Number one, Bitcoin CAGR versus MSTY. Bitcoin's historical CAGR is 100% plus annually. MSTY is a yield vehicle, dividend producing, but lacks asymmetric upside. In a Monte Carlo simulation we ran, holding MSTY only had a 6.3% success rate versus Bitcoin when aiming for higher terminal wealth over time. Number two, MSTY income versus Bitcoin appreciation. 6,000 a month is 72,000 a year. It's a great cash flow, but if Bitcoin doubles just like it did from 30 to 60,000, that 100,000 of Bitcoin is now 200,000. MSTY doesn't do that. Number three, it's a liquidity trap. That MSTY income is taxed. And FYI, you don't pay tax in Dubai. So British HODL's not paying taxes, and similar story here in Puerto Rico, but I digress. It is not guaranteed and heavily exposed to the market beta. If yields drop or the price declines, you're stuck with less income and no explosive upside. Number four, the smarter play. Instead of converting BTC to MSTY, you could borrow against the Bitcoin at a low loan to value, which is an alternative option I'll chime in about later because I have experience with that as I purchased my house I'm in right now using a Bitcoin-backed loan. And so he says, pay $2,800 a month from a small loan and let the biddy ride. If Bitcoin continues the historical path, you not only keep your principal, you multiply it. And you can always peel off later as needed. The debt gets inflated away. British chimed in responding, Oatmeal, you understand, right, that a portfolio doesn't mean 100% in either direction. You can have a balance of both. You sound like a moron with the comparison. The first question you should ask is how much in MSTY? And you've religiously watched my videos, so you already know I said a max of 10%. So ultimately, he says never risk more than 10% of your portfolio into MSTY. So that's why he's clarifying. Stop lying to the people and do some fair chat GBT analysis. So there you have it. You guys let me know your thoughts on that. And I know, Greg, you have experience here, so I'm particularly interested in your feedback, and I want to open up this conversation. What do you guys think is the smartest play? If, let's just say I made the decision, I'm buying a new Range Rover. So either way you slice it, I plan on executing a transaction using 1.5 Bitcoin, whether I get a Bitcoin-backed loan, whether I pay for it outright using the Bitcoin, or whether I put it into a stock like MSTY or MSTR specifically to earn some form of a yield. What would you do? What do you think is the smartest play? I'm open to suggestions. Now, I'll give you some feedback. I purchased this house using a Bitcoin-backed loan in 2022. And long story short, you know, they say hindsight is 20/20. If I can go back in time, I would have not got the Bitcoin-backed loan because I could have just purchased the house outright, let's say at that time for 18 Bitcoin. I used the Bitcoin-backed loan. Bitcoin tanked. And to avoid liquidation, I had to pay off the loan before getting liquidated, losing all my collateral. And in the end, the house cost me 28 Bitcoin. So would I have gotten a Bitcoin-backed loan if I foreseen what was going to happen into the future? Absolutely not. So there is a high risk there. It can work either way. It can work in your advantage, or it cannot work in your advantage. And at that time, Bitcoin already achieved 69,000 in 2021. So when we dumped to 40,000 in 2022, my thinking was like, wow, this is probably the bottom. What a great time to get a Bitcoin-backed loan. Little did I know Bitcoin would crash to 17,000 later that year, right? And I would have gotten liquidated and lost all my collateral if I didn't pay off the loan. So it was a very risky thing to do, the Bitcoin-backed loan, because we're talking, you know, a lot of Bitcoin collateral. This was a big purchase, obviously, for the house. But anyways, I digress. I'm going to read comments and go from there.